All right, good morning, everyone. Louis Porcelain on Man Over Market, and today is August 25th, and this is the ES Morning Call. Well, a little calmness back in the market this morning. The markets are up about 3%, but I'm just going to warn you that the markets are not done with its volatility, and that it's going to be jumpy for a while. Uh, One nice thing yesterday that even though the market was highly volatile and moving around like a penny stock, it at least we didn't have the algos to deal with because when they can't rob and get in front of people and high frequency guys can't pick off your orders because they're worried about losing money because they don't even ever put any risk on to lose money, right? All right, 7,600 point range overnight. So you got a high up here at 1948 half. We've got a low way down here at 1872, 1872 even. Here is yesterday's 1831 was the first halt after the market opened up, so that was 7% decline, and and we got a huge buying tail that came in, and then we've recovered overnight. I think the overnight markets have all stabilized. But the one thing I did, and so take a look in the right hand column here. We still, we put some volume back in here, but I still think that there's more volume that has to be put back down in here. 1860 area to 1865. We filled that gap that we had in there, and then the lows yesterday. What I showed you was the lows from October of last year. I'll show you that on the day chart, but um, so I still think we're going to get a two-sided trade, very jittery. I think the market needs to fill in more down in this area than 1900. Okay, so expect a two-sided trade today. That's all I can tell you. The one redeeming grace yesterday, I thought, um, you know, I kept saying that gold is stable, and gold did not, shoot up and make a, like shoot up like $40, $50. It was kind of stable, and now this morning it's lower, trading below value at 154.18. I'm sorry, in the 1150 area. So it's trading below value. We've got our bull bear zone in gold at right here at the bottom here, 1154.20 area. So that is trading below. And the other thing also that happened overnight, oil made a nice rebound, but it's still. I don't think it's out of the woods. I mean, oil is not really tied to the market. It's trading above value right now. We had a $2 rally, but I think that oil is being driven by the other forces, not just the economy, right? So, well, I mean, it is the economy and slowdowns, but also the overproduction of oil. So, oil is made a real rebound, and then the bonds, the bonds was spiked up yesterday. Now we're down at the 157. Still hoping for that the Fed rate hike. Listen, if we're resilient and we stay through what we did yesterday, they might take a shot and give us give us the hike now. I don't think so. I think they're going to wait till the end of the quarter, right before January. Right before the new year. So bonds are trading below value. And then up here we got the bull bear zone up here like 169.13, 160.13. So keep an eye on that. But S&Ps yesterday we hit basically. So we got a 7,600 point range in the overnight. Let's take a look at the value area low and high. So we've got the value area high at 1925 half. Well, we're going to put our bull bear zone at 190, 1910 half. 1907 was the point of control, and then the bottom of value is way down there at 1878 half. Big middle yesterday, 1925 half down to 19. What is it? I'm sorry, 1898 half. So I think you're gonna get more of the same today. I think you're gonna, it's a jittery market. I think that the market's gonna have to fill in on both sides. Right now, currently, our pivots are in a buy. The 5 minute pivots are in a buy, and the sisters, and also in across the board. So I think that we're going to have a little bit of a two-sided trade. Remember that we do have when I look at this chart, we have a gap up here. From yesterday, 68 down to 65. All right. So that's another, and there's gaps way up there, but so there's going to be gaps up above. I think there's stuff down below. I'm sorry. Here's the gap right here. 1968 or 1967 half. All right, from our opening here, 1951. So we got a lot of things to be navigating, but you're gonna have to be careful here, looking for failures on both sides. Um, and then the other thing I wanted to point out yesterday, when we locked on the first limit or the second limit, so that the 7% halt, this is a huge buying tail. I mean, we didn't spend any time there at all. Um, and if you got fortunate and bought some down here, they were immediately winners. So I just think that and when I look at the volume here, because we had the lows in October were basically 1813. We were looking at that yesterday. I was showing it to you, and then that was when we just kept going up and up and up and up on no volume. And when you have markets that are built with loose structure, those are the kind of retracements that you get. All right, everybody, stay with us on Twitter. We'll try to keep you out of trouble. And two-sided trade today, and I'll talk to you later. Bye.